Welcome to another S&P 500 analysis. The first half of the year is over and the disparity between markets and sector are huge. In order for this disparity to be resolved, some huge price action will need to take place in the second half of 2023. Now in this video, as in every week's S&P 500 analysis video, we'll look at the price action of the indexes, the market sentiment, market internal to see how strong or weak the market is. We'll look at the 11 sector in the S&P 500 and see which sector are doing well and which sector are doing poorly. We'll also take a look at the 10-year yield, US dollar, oil, silver, and gold and see where these markets are headed. Now, for those that are following or have an interest in the index ETF, such as the Diamond, the ETF for the Dow Jones Industrial, the SPY, ETF for the S&P 500, QQQ, ETF for the NASDAQ 100, and the IWM, ETF for the Russell 2000. We'll also look at some of the possible price scenario for these ETF and also the price level to watch for the near term. And in addition to that, we'll also take a look at what the market is pricing in for them for the coming week. So stay tuned. Now let's start with looking at the year-to-date, basically the first half performance of the indexes. As you can see from this table here, the NASDAQ 100 is the top performer and is holding a gain of almost 39% at 38.75%, with the NASDAQ Composite closely following it with 31.73% gain. The Dow Jones Transportation is actually performing quite well. It is up at the third place with almost 16% year-to-date gain, followed by the S&P 500 with 15.91, so it's only 0.05% below the transportation. The Russell 2000 is close to a 7.25% gain. The New York Stock Exchange Composite is 4.5%, and the Dow Jones Industrial have the smallest gain year to date and only finished the first half of the year with 3.8%. And looking at the month to date, the Dow Jones Transportation is on top with a 13.28% gain, and the Russell 2000 is in the second place with 7.95%. And the New York Stock Exchange Composite at 6.64%, the NASDAQ Composite at 6.59%, NASDAQ 100 at 6.49%, and the S&P 500 at 6.47%, and the Dow Jones Industrial at the bottom of the list with 4.56%. And looking at the week, the Dow Jones Transportation is on top of the list. So you could see the trend here. The Dow Jones Transportation seems to gathering strength and is moving up on the list here. And the Russell 2000 finished the week with 3.68% gain. And the New York Stock Exchange Composite with 2.63%. S&P 500 2.35%. The NASDAQ Composite 2.19%. Dow Jones Industrial a little bit over 2%, and the NASDAQ 100 is on the bottom of the list with 1.93%. And looking at this weekly chart of the S&P 500, you see that the range kind of expanded to 130 points, and the gain for the S&P 500 for the week, it gained 102 points or 2.35%. It did finish with an engulfing candle, a bullish engulfing candle, in other words, an outside bar here, and close above this rising 10-week and also the 40-week moving average. And it also put in a new 52-week high. Now let's quickly run down the 11th sector of the S&P 500. You can see year to date the XLK is on the top of the list. That's the technology ETF, the technology sector, with the almost 40% gain. You see that the relative strength is pretty much holding up, relative to the S&P 500. Although it did not make a new 52-week high last week. And the communication seems to be weakening a little bit, but it's still holding up relative strength to the S&P 500. Again, it also did not make a new 52-week high. Now, the discretionary, consumer discretionary did make a new 52-week high, and also the relative strength is coming up. The industrial made a new 52-week high. And looking at this relative strength graph here, it also shows it is start to make a move upward. And here's the material. The material did not make a new 52-week high, and it is holding steady here, lower portion of the relative strength graph here. And the real estate, it is not doing much, but it is holding inside of this range. So we're still waiting to see which direction it's going to break Would it come up and break the 39 level, or would it come back down and break the 36 level? And the consumer staples really shows some kind of weakness, underperforming the S&P 500 relative to the S&P 500. But the price action seems to be holding steady here near this 74 level, between 73 and 74, middle of this range between 70 and 78. The financial is holding steady on the price action. It actually did come up and try to take out this high here, but the relative strength still down here at the low. And the healthcare sector is also performing relatively poorly relative to the S&P 500, but the price action seems to be holding steady near this 132, 130 zone here. And the energy also is not doing too strongly here, relative strength to the S&P 500, but the price seems to be holding steady between this 80 level. And so right now, we'll see, would it be able to get a bounce off from this 78 level and come back up to test the 87, or would it get another breakdown from this 78 and this time maybe come down and test this area at 70? And we'll take a look at the oil market later on in this video to get a little bit more insight where we think the oil might be headed in the near term. I almost forgot about the utilities. Apologize for that. So they're looking at this table, just go back and revise some of the performance. The utility actually closed just slightly above the XLE, a little bit better than the energy sector year to date. But for the month to date, it actually is the poorest performer, and so was for week to date. So looking at this utility, you see the relative strength compared to the S&P 500 relative to the S&P 500 is not good. It is still going down, but the price seems to be holding at this 64, 65 level. So once again, it's holding pretty steady. And we'll see would it be able to continue to try to make improvement and move up, and see if it could do a little bit better on the relative strength relative to the S&P 500 in the near term. Now let's take a look at the sentiment here. As you can see, the VIX is still down at this multi-year level at the 13 area. Finished Friday with 13.59, so definitely showing the market participant are still very complacent. And also the put call ratio is below 0.75, so they are risk on. So definitely the market participants are bullish. And the up-down volume ratio last week was positive throughout the entire week for the New York Stock Exchange. And also the daily advanced decline showed broad market participation on the upside. And the new high is expanding. The new 52-week high, number of stock making new 52-week high is expanding, and it is outnumbering the new low by 210 on Friday. We see that 226 stock make new 52-week high on Friday. Now we are seeing the cumulative AD line coming up, but the existing negative divergence is still need to get resolved. And looking at the NASDAQ market, the NASDAQ up-down volume ratio was also positive throughout the week. We did see some upside participation on the daily advanced decline, but not as broad as we would like to see it. And the interesting thing is on Friday, the number of stock making new 52-week high outnumber the number of stock making new 52-week low. So that's a change toward a positive. And the huge risk is on the downside, looking at this cumulative AD line versus the NASDAQ 100 index. This huge negative divergence is still waiting to get resolved. So this until this negative divergence get resolved, the risk is on the downside. Now, looking at this yield curve here, the 10 versus the 2, we see that it came down to 1.057 on Friday, and the low here is minus 1.08. So we're getting close to that level, and certainly this is pointing in every which way that we're going to see a recession. So I think, a little, the talking head is talking about a soft landing. I believe right now it's a little bit premature to talk about soft landing or hard landing until we actually start feeling the blunt of the recession, and which when that occurs is when we see the job market really get weakening. Right now, we are not seeing much of an impact on the job market yet. And here looking at the 10-year yield, remember we were talking about watching for it to come back up to this 4 level. Right now it's getting close to this 3.9. It creeped back up above the 3.8 last week. So we're still looking for the rate to continue to come up and possibly get back up to this pivot high here up at the 4 level. So what this is telling us that the market is still expect the Fed to continue to hike rate instead of reducing rate. And for the US dollar, we saw the US dollar got a nice bounce and came back up to close to this 104 area and close at 102.92. So we'll see, would it be able to come up to this 103.80 and then get a rejection back down to possibly come down and test this 100.80 area here, or would it break this 103.82 and move up toward this 105.80 and test this pivot high? Now take a look at crude oil. Last week, crude oil got another bounce off of this trend line here and got a little bit of a positive bullish little hammer here. There is a daily gap that need to get filled. So looking at the support on this trend line here, and if the dollar continue to weaken, we probably will see oil try to make a move back up toward this 80-83 area here. So until this trend line, is broken, then we'll continue to look for oil to bounce. And if it could stay above this 71 area, this level here. And for silver, last week, silver also got a little bounce, and before it pulled back. Now on Friday, it did try to come back up to this level near the 23 area. And we are still looking at this bear flag to get played out. So unless the dollar goes down substantially and help propel the silver to be above this 23 level and come up to this 24 area to invalidate this bear flag, we're still looking at these major moves down here near the 22 and the 21 area. In the story for gold last week, we might have seen a little bit of a near-term bottom here when the buyers stepped in on Thursday, putting in this doji hammer here, and then we got a little bit of a follow-through on Friday. So if we could see gold get back above this 1937 area, then look for a move up to possibly come back up to this 2000 area and back test this level. Now, if we get rejected back down from this 1937 or from the current level, then look for this composite point of control once again down here near this 1900 area to see would it get a bounce, because last Thursday we saw buyers stepping in at this 1900 level. If it breaks this composite point of control, then the seller is regaining control and we could see it push back down to this 1800 level. So as long as the price of gold is above this composite point of control, then the buyer are still in control, even though we are looking at this little bit of a downtrend. Now let's take a look at the indexes here. We are looking at this SP 500. On a weekly basis, you see that there is this pivot high here, and last week it held above this pivot high at 43.25. And right now we're looking at this possible pivot high for the upside, and that would be somewhere around 415, 12.94. So that is the upside level that we're keeping an eye on. And the downside is down here at this 41.95 level. And switching to the daily chart here, we see that last week it actually closed above the upper range of the expected move. On Thursday, it's actually just tagging at the bottom of this particular range. And Friday, it just gapped above it and also put in this 52-week high because it took out this pivot high here. So for the coming week, the expected move upper range will be between 45.02 and 44.93 area, and the lower range is between 44.07 and 43.85. So the possible scenario to keep an eye on is because we got this gap here, we don't know, is this a continuation gap or would it be just a gap to sucker in the last investor sitting on the sideline waiting to come back into the market and see will we get an exhaustion candle such as a inverted hammer, shooting star type of candle, or with a small spinning top with a long wick, topping wick and that kind of type of stuff, a candle, to see are we getting a exhaustion on the upside. So the possible upside move is to see would it come up to this upper range and come up and tag this 4512.94. So that will push us up above the 4500. Then on the downside is to come back in and tag this lower range and essentially fill this gap that was left behind from Friday and come down to this 43.25 area, and once again test this area for support and see what it holds. And if it doesn't, then we're going to be looking at a possible correction or a pullback down to this 41.95 or 4200 area. And for the Nasdaq 100, we're looking at this weekly chart here, and it seems like it is trying to come back up to this pivot high here at 15,265 after dipping below this 14,787 and found some support and bounced right back. So we'll keep an eye on it to see would it be able to reclaim this 15,265. And looking at the daily chart from last week, you see that it just came up to the upper range of the expected move on Friday and closed right near the bottom edge of that expected move zone. So for the coming week, we'll be looking to see would it continue to move up. And the upper range for the coming week is between 15,490 and 15,418. And the lower range will be 14,940 and 14,875. So the possible scenario is for it to come up, take out this 15,265 and move up to the upper range and see what it get above it and work up toward this 16,000 area. Now, if it comes down to fill this gap and tag the lower range, then we'll be watching this level here at 14,787 for potential support and see would it be able to bounce off from it. If it doesn't, then we'd be watching for a possible pullback toward this 13,880. And for the Russell 2000, we saw a little bit of an exhaustion shooting star type of a candle after a gap on Friday. So is this the exhaustion gap or just a little bit of a fake out here? So we'll be watching in the coming week to see would it be able to come up to this 1906 area and take out this 1906 and move up to this 1925. Now, if it come down and fill this gap, then look for this 1816 area and possibly come down and fill this gap at 1782. Looking at the Dow Jones Transportation, we see on Friday actually put in a bearish hangman type of a candle. So maybe it is getting ready to come back and double check this 15,321 for possible support before it makes a next leg up toward this 15,651. We'll be keeping an eye on the Dow Jones Transportation to see would it be able to get above these 15,651 or 15,321. Get below that, then we could see it possibly come back down toward this 14,637. And looking at the Dow Jones Industrial on a weekly chart here, we see that it broken out from this wedge here and got above this 34,400. So in the coming week, we're going to see would it continue to move up toward this 35,500 area, or would it come back into this wedge and possibly come down and fill this gap here. And looking on the daily chart for the Dow Jones Industrial, we see there was a gap on Friday, stay above the 34,277. So if it come back in and fill this gap, then we'll see what it be coming back down to this 32,273 and possibly come down and fill this gap here. And looking at the New York Stock Exchange Composite, on this weekly, some might even consider this as a inverted head and shoulder pattern. And if this turned out to be a inverted head and shoulder and it play out to the major move, then we're basically looking for all-time high on the New York Stock Exchange, which is, to me, is a unlikely scenario at this particular time. But hey, who am I to say that it won't happen, right? Anything is possible. Now, looking at the daily on the New York Stock Exchange Composite, we also saw a gap on Friday, and right now it might be coming up to this 15,966, so it's about 16,000 area. So we'll see, will it be able to get up here and get rejected, or will it continue to move up, get above the 16,000 and come up to this pivot high near 16,200. If it does get rejected and found resistance, come back down and fill the gap, then watch for this 15,710 area to see would it be able to hold. If it doesn't, then we'll be looking at the 15,441 level to see would it be able to find support there. And if that failed, then eventually we are looking at this gap down here at 15,174 to be in play. Now let's take a look at the ETF for the indexes, starting with the diamond, the ETF for the Dow Jones Industrial. As you can see, these levels are extracted from this composite volume profile here. And this is the 344 area that we're looking at last week. And in this daily chart here, we see that the price came up to the lower edge of the upper range of last week's expected move on Thursday. Then we gap up on Friday. See, this is the level that we say keep an eye on, that 343.80 area, this level here, and see that it closed right near that level on Friday. Now, what we're going to see in the coming week is, first let me put up the expected move for the coming week. And here are the expected move ranges for the coming week. And it will be somewhere around 347.70 and 347 for the upside, and 340.70 and 339.80 for the downside. Now, the possible scenario is for this to continue to move up, bounce off of this area of support here, this 344 area, and pushes up into this upper range and come up, try to tag this 348.54. That's another level that we're watching, that we extracted from the composite volume profile. Is one of those volume ledge level, and that likely to act as potential support and resistance. Okay, so this is the upside scenario that we'll be keeping an eye on for the diamond. Now, for the downside is we get rejected from this 343.80 area and pushes back, fill the gap, and come down and test this lower range of the expected move, and then push down to the composite point of control. Now, depending on the price action, when it get down to this composite point of control, will we get a bounce up, or will it go below this? And if it goes below it, then that means the buyer is on the downside and the seller is in control. Okay, but if it stay up above the composite point of control, then we have a little bit of a bias to the upside, where the buyer has a little bit of an upper hand. Okay, so that's the key level to watch here, is the 338.66. This composite point of control. If it dips below, then expect it to come down and try to see what it get into this gap here in the near term. Not necessarily next week, but it could be, because we do expect the FOMC minute to come out. So we'll see how much of a market reaction to that minute. And here's the SPY, the ETF for the S&P 500. Now, we do have an upper level up here to keep an eye on, which is 450.34. So beware of this upper level here. And if we see a continuation on the upside, then most likely people will be talking about 4,500 on the S&P 500. And that will be equivalent to somewhere around this 450.34 for the SPY. And looking at the daily chart here, we see that once again, remember this level that we're keeping an eye on, this 435.48, and you see on Thursday it held above that, came down, tested and bounced off from it, and then tagged the lower edge of the upper range from last week. Then it gapped up on Friday and put in a 52-week high here. So now for the coming week, we'll be looking at these upper and lower range. So the upper range for the coming week will be between 448.60 and 447.80. And the lower range will be 438.80 and 437. So here are the possible scenario to keep an eye on. Now, if this come up, continue to move up, then look for this upper range to get tagged. And if it could go above it, then we'd be looking at this 450.34, and the S&P 500 will be hitting 4,500. Now, if it come down and fill this gap and tag the lower range, then once again, we're going to be watching this 435.48 to see what it be able to hold. And if it doesn't, then we'd be looking at this 429.50. Remember, this is one of our downside target here. So keep an eye on this 429.50. The key level to watch next week on the downside is 435.48. That's a support level that we want to keep an eye on. And here, looking at the QQQ on the weekly chart here, you see there's a level here that is posed a little bit of a resistance a couple of weeks ago at 372.88. So we're going to keep an eye on to see what it come back up and test that level once again. And also here in the support area is this 357.48. And notice that last week it also came down and test this level here. And on this daily chart, we see last week it closed just underneath the lower edge of the expected move, the upper range of the expected move. And it got above this level that we'll keep an eye on at 367.48. So for the coming week, the upper range will be between 377 and 375.30, and the lower range will be between 363.60 and 362. So here are the scenarios. On the upside, come up, tag this 372.88, and if we could break through it, look for the upside, the upper range of the expected move, and possibly come up to this 378.91. Now for the downside, it's come back down, fill the gap, and tag this lower range and see would it be able to hold. If it doesn't, come down to this potential support area at 357.48 and see would it find support. And if it doesn't, then we'd be looking for the lower target level here at 338.51. Finally, looking at the IWM, the ETF for the Russell 2000, on this weekly chart here, we see this potential wedge here, and it is still inside of this wedge. And these are some of the levels that I extracted from this composite volume profile. And from this daily chart here, we notice that the IWM, the seller was in control on Friday. Remember this watch level that we had on watch here, and actually moved above that and got away above that on Thursday. Then on Friday we got a little bit of a gap up, and then the seller just sold it all day long. So that is a little bit of a bearish sign, so we have to keep an eye on that to see what it come back down to this watch level for the coming week. And here are the ranges for the coming week. For the upper ranges, it will be between 191.40 and 190.30, and for the lower range it is between 184.20 and 183.50. So the scenario that we'll be keeping an eye on is to see, will this downside here on Friday, the selling control, will the buyer be able to step back in and push us back up to this resistance level that we've been watching. This is 189.92, so somewhere in the 190 area, and come up to the upper range of the expected move and possibly tag this 191.49. Or will the seller continue to hold control and push this down to the lower range of the expected move, somewhere around this 184 area, and come down to the support level that we've been watching at somewhere around 183.38. So those are the two key levels to keep an eye on. This right here, 190, and this 183 area. And if either one of these level is broken, then look for the upside on the toward this 195. And if it breaks below this 193, then look for the downside here on the first target of 178, 179 area, and then this gap down here at 176. So in summary, we saw a huge gap up on our indexes last Friday, which is the end of the month and end of the quarter. The question is this gap a continuation gap that could lead to a much more upside, or is this gap is just a head fake to get all those waiting on the sideline to capitulate and get back into the market near the end of this run? The answer might come from next week's price action, and I will post an update later on the week to see if we have an answer from the market or not. So if you are new to this channel, be sure to click the subscribe to this channel, and don't forget to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.